let's go ahead and get started. So as we do these webinars every single Tuesday, it's all about you guys. So if you have questions throughout this, use the chat box, use the Q&A box. I will do my best to monitor both of the forums. So I want to try to deliver as much valuable content to you. If you have a very specific question or a general question, feel free to ask it. There's no wrong question. There's no bad question. I will do my best to keep it anonymous. No one's going to be called out for asking a question. So get the most out of this. It's really meant to be for all of you. So we appreciate you being a part of it. And without further ado, let's jump into this first topic here about the timeline to retirement and or the financial freedom timeline. So I think about these really as kind of one and the same. If you are in your later working years and you are nearing that retirement age, whatever it may be, around 65 years old, then it's time to start planning for retirement. Or if you are looking to leave your W-2 job and you want to have a financial freedom number, or, as I like to say, I retired from corporate America. I think I was around 30 years old and really wanted to get away from the hustle and bustle of corporate America, that W-2 paycheck. And so I talked about things to myself as a financial freedom number, but really they're one and the same. So recently I've had a lot of conversations with our investors about, hey, Danny, we're planning for retirement. What does this plan sound like to you? Are we thinking about things correctly? And how do we have a balanced portfolio, a diversified portfolio? And we're going to get there. And so, the timeline to retirement is really important, or that financial freedom goal and timeline to get to that. But ultimately, you need to determine what that number is. And so, if you are currently making $200,000 in your W-2 paycheck, whether you're nearing retirement or early in your career, but if you're making $200,000, 30% of that paycheck goes to tax withholdings. And so realistically, you're making about $11,500 a month. And so let's use that example as we continue through today's webinar of having a cash flow number when you get to retirement, or for your financial freedom number of getting to $11,500 a month in cash flow to feel comfortable to pay your expenses, pay your cost of living, and live comfortably with that. It's such an important topic. And, it never really clicked for me until I actually did the exercise. But here's the exercise to do. Think through what you currently spend money on, what you enjoy to do for fun, whether it's, a low cost activity of going for a run, or, maybe it's a higher cost activity of playing in a bunch of pickleball tournaments around the country, or playing golf, or going to the opera on a regular basis, or going to a bunch of music shows. Whatever your vision for living your life is, all of those things that you like to do equate to a dollar amount. And you should be able to get pretty darn specific. For example, if you like to go to music festivals around the country, how many are you going to go to on an annual basis? How much does it cost to travel there? What's your lodging? What's your food cost for the weekend? And then you come up with that number of what it is, and you build that into your monthly cash flow need from an expense perspective, as well as, what your living situation is, what your car situation, insurance, any sort of tax perspective to think through. And it's a really fun exercise. And so again, let's focus on the exercise of being, someone who is nearing retirement. They currently make about $11,500 per month in take-home income. That's cash directly deposited into their bank account. How do we methodically think through replacing that in later years when you're not working? And I know it's a super scary thing to go from receiving a direct deposit paycheck every, 2 weeks into your bank account and paying your bills as you go throughout the month to no longer getting a W-2 paycheck every 2 weeks. It feels really scary. But a lot of people have done it before you, so don't get overwhelmed, even though it's a new experience to you. You got to definitely embrace that. But I think, looking that kind of unsettling feeling right in the eyes and saying, I'm going to conquer this obstacle, it really is a good motivator to think through and start planning. So if you have not done the cash flow exercise, I recommend you do that to figure out, if you were to stop working today, how much money do you need to live? Or if you have plans to really do a lot of different activities in your later retirement years where you want to travel the world every quarter, that's going to be totally different than someone who likes to read books and take long walks in their community and not travel the world. There's just different expense levels to it. The logic and the process is exactly the same for everyone. Some people will just have a different cash flow number that's needed to cover their differing expenses, but the same exercise. And it's one of the best things you can think through to really understand what life is going to be like in your later years, or if you want to leave corporate America early and become a full-time entrepreneur, active investor, or a active and passive investor. So thinking through your monthly income number is absolutely critical. That exercise of, again, thinking through all the activities you like doing, every single activity out there, you can associate a dollar amount to that. And, I definitely encourage you to spend, 5 minutes pricing out some of these different activities, because it's going to give you a realistic monthly income number that you need to meet. And so, let's kind of rewind a little bit to our retiree example, or person nearing retirement who wants to replace their $11,500 in monthly income. You got to think through what investments will fit your goals. And so, got to take an inventory of where you're at. What assets do you have today? What will your assets grow to over the next few years? And how can you use those assets to meet your goal? And again, if the goal is to generate $11,500, and let's just say, for example, this made up person has a 401k because they've been in corporate America for the last 30 some years. They've diligently saved money in their 401k. Their company matched it. It's grown over the last 30 years. Let's say they have $1 million in their 401k. That's a huge asset for that person to help get and work towards that goal of generating $11,500 in cash flow per month to replace their income that they need. With that 401k, as a person who's always been involved in corporate America, you might not be sure how to access that money when it comes time to retire. A lot of companies won't let you kind of liquidate your 401k, roll it over into a self-directed IRA while you're actively employed. But once you leave that company, you're able to roll over your 401k without any penalties, without any fees, without any taxes into a self-directed IRA. And I am sure we've done a bunch of different webinars, or, Whitney on our education team has done some master classes about opening and managing self-directed IRAs, individual retirement accounts. So I won't get into, excuse me, those details, but just know that you can take your 401k, you can roll that over into a self-directed IRA. Also, a lot of people who have been in their working years for, 25, 30 plus years may still participate or have some pension cash balance available to them, where they could have two options with that. Option one, the company, when you retire, would pay you a monthly pension income, and you could have that to offset your goal of 11,500, or you could take a lump sum payout and the company would pay you out your pension balance when you leave the company, and you can roll that money without paying taxes, without any penalties, into a self-directed IRA account. And then you can go out and invest that money into investments that fit your goals. And so when we're talking about investments that fit the goal, as you are thinking about whether it's retirement number, cash flow retirement number, or if you're a younger person thinking about financial freedom, the most important goal of your assets is to generate this monthly income number for you. It's not about growing the dollar amount, it's about producing monthly cash flow. And so I think there's a lot of people out there that will sometimes get a little conflicted whether you're going after an investment that produces high cash flow, or you're going after an investment that produces a higher ROI, a return on investment, but it may come down the line. And what I mean by that is having investments with a balanced portfolio. So balanced can mean short-term investments and long-term investments, as well as higher cash flow producing investments or higher ROI producing investments that come later on. And so one example of a short-term investment that produces all cash flow is our real estate debt fund, our lending business. So as investors, you put in $100,000 or more, you get an 8% preferred return on your investment, and that can be paid out monthly directly into your checking account, or you can let that money compound and get access to it when you need it. So it's short term, it produces high cash flow, and you have a liquidity component to access it when you need it. Versus on the opposite side of the spectrum, you may be invested in a larger multifamily deal where your money is tied up. It is a long-term investment, typically 5 years or more. But with the market the way it is today, it's hard to have predictable exit timelines. So your investment could be held up for 7 years instead of 5, or maybe it takes 10 years to achieve the investment horizon. And so you definitely want to balance out the short-term and the long-term investments as it relates to your monthly income number. This bucket of money, as you're thinking about generating $11,500 in monthly cash flow, again, the most important thing is that monthly cash flow number. And so, I always encourage people to have that balanced portfolio discussion about, are you being a little too aggressive by being in longer term investments that are less liquid? They produce a higher upside, but there's less cash flow along the way. That does not meet your cash flow goal as much as a higher, shorter term cash flow producing investment would yield as it relates to your retirement cash flow number or your financial freedom number, however you like to think about it. So a balanced portfolio, the investments that could fit those that can fit your goal, really important. Short-term investments, long-term investments, liquid investments, illiquid investments, higher cash flow investments, higher ROI investments. You got to balance it out for both. There's also, the areas in today's market where you might have a high yield money market account where you might be able to earn 5% on the balance in your checking account or in your money market account at the bank. That would be a huge addition if you are trying to get to this 11,500 number. Let's just say, for instance, you keep $100,000 in cash in the bank just to pay your expenses, and you constantly have a balance of about $100,000 in there. Earning 5% over the year is certainly going to help build your balance towards that 11,500 number. That $100,000 earning 5%, not super meaningful, but it gets you a couple $100 a month towards that goal if that's how your personal portfolio is set up, where you have a component of cash, you have a component of your IRA funds, you have a component of investment cash, maybe you have some stocks and bonds as well in that portfolio. But you really need to think through each bucket of your assets and saying, how does this fit my goal? And you could have two goals. The first goal could be, hey, I need to have $11,500 per month in cash flow coming in. And so, maybe you're taking the entire $1 million in the 401k and you're putting it into the debt fund and earning 8%. That's going to get you a huge chunk on your way to the $11,500 goal. And you just say, hey, set it, forget it. I know it's coming in. I'm good with that. And you have other buckets of assets where you're saying, hey, these specific dollars, I'm okay being invested in this stock because I want it to grow. And I'm balancing this portfolio to have a cash flow bucket to meet the cash flow number. And then you're going to have a higher yield return bucket to meet your growth target. So you have to balance both of them out. The other important thing when you're thinking about your personal portfolio is diversification. So, this can mean asset class, whether it's multifamily, self-storage, express car washes, hospitality, hotel, a lending business, stocks or bonds, cash in your checking account. Diversifying across asset classes is one way. Diversifying geographically is another thing to think about. So just being in multifamily real estate, for example, if you're invested in one deal, you don't have much diversification if that one single market, one single deal has challenges. You want to be diversified across a couple of different markets, a couple of different geographies potentially, whether it's the Carolinas or Florida, whatever sort of geographies meet your investment goal is where you want to be. So a place like the Southeast US, it's a higher growth market. There's a lot of people moving to the area. You should see a higher ROI on those investments as opposed to like a Midwest multifamily deal. You might have more cash flow being generated, But it's not going to have that same higher ROI in 5 to 7 to 10 years. And so again, diversification is equally as important as having that balanced portfolio. I'm going to pause here, take a minute to have a drink of my coffee and see if there are any questions. Please use the chat box, use the Q&A box. I'm going to do my best to keep track of both of those boxes. Feel free to ask any question you have. Again, there's no good question, there's no bad question. We're all just trying to learn and help each other out. So happy to do that. If there are questions and we can go through them. If not, to kind of recap, that's really the exercise that I like to do on a routine basis to make sure my personal portfolio is balanced, it is diversified, and it is meeting my goals. And you need to prioritize your goal as number one, number two, number three. What are the important goals to do it? How can you take your assets and put them to work in the varying investment opportunities, having a balanced portfolio, being diversified, and getting the output that you so desire? It's a very hot topic as we move through the general economy, but also as a lot of companies out there, a lot of W-2 corporations out there are offering people early retirement, special buyouts. A lot of companies, even in the tech space, have laid off a bunch of young people. And so I think we're going to continue to see some of the workforce being contracted a little bit. I think companies are looking for areas to boost NOI. And one way to boost NOI is by decreasing payroll if they're able to. And so I think we'll continue to see a trend where a lot of companies want to try to optimize their kind of go forward plan and maybe reducing some of the workforce by, again, offering early retirement, offering buyouts, offering special packages. If you're someone who has a W-2 job, I wouldn't be surprised if that offer is being talked about within your company. It could be something to consider. And again, going through this cash flow number exercise, what is your retirement number or what's your financial freedom number, is going to give you a little bit of peace of mind to know what you need to do in order to achieve that. So I hope today's webinar has helped. Again, if there's any questions, use the chat box, use the Q&A box. I'll do my best to monitor those out. If there are no questions, again, thank you so much for joining us. I hope this information is helpful to you. If you have a more in-depth personal question about your financial freedom number or how you're thinking about retirement, again, go to passiveinvesting.com, join the Passive Investor Club up here in the top right of the screen. Reach out to one of our team members. We'll be happy to have a discussion with you, talk to you about different solutions we may be able to help with, or just point you in the right direction to help you achieve your goals. So without further ado, if there are no questions, we will catch you next week, Tuesday. It is going to be February 6th, right here, 11 a.m. Eastern Standard Time. Thank you so much, everyone, for joining. And we will see you next week, Tuesday, February 6th, 11 a.m. Eastern.